How should the average person invest in 2026?
I think we all have to come to terms with the fact that enterprise is going to continue to get bigger. We're going to redefine economies. I think the most exciting thing about this next wave of the AI super cycle is that it's likely to be broad-based, meaning that I think unlike the last wave of the cycle where we had 15 or 20 companies that kind of benefited most and sucked up all of the energy from the stock market, so many companies will benefit from the AI efficiency wave. But part of the reason why they're benefiting is because they're lowering their cost. And a lot of workers are going to get laid off as part of this cycle and are going to have hard times. So one of the ways to defray your risk against that is to be invested in the companies that are benefiting from those efficiencies of having to have less labor, right? They become more efficient, their margins go up, they grow faster. In return, the market, I think, is likely to reprice multiples market-wide higher, meaning that we can see the entire market lift as a result of this if all the companies left in the market become more efficient. That's exactly what happened during the dot-com cycle, right? If you go back to the 1980s and 1990s, the average market PE was like single digits, and then it was like low teens, then high teens, and then it grows into the 20s. Well, it's not because the market's becoming overvalued necessarily. It's because the companies that comprise the market are now better. Those companies are growing faster. They're tech companies. They have 85% software margins. So the dynamics of what the stock market is fundamentally changing over the course of time. And if you look at what AI has the potential to do, it's another full step up. So I think there's never been a time in our life where it's more critical to be invested, just to be invested. The degree that you want to take on active investment, that's a personal decision. But it's insane not to be invested in the market. Like my entire passion in life is to have every human in the world part of the investor class for this exact reason. Because if you're not part of it, you're going to get left out. And it's a really scary thing.
So in terms of investing in the market, most people watching this, most people following the channel are very safe investors. They want to invest in like the total stock market, maybe some bonds, some treasuries, it's a well-diversified portfolio. You will come on here and say people need to be invested in risk assets. What percent, generally speaking, and how do you know what qualifies as a risk asset and what technically does not?
I think when we talk about like a risk portfolio or like a higher risk, higher return bucket of money that you have either inside of your account or preferably separated into a separate account, I think it's money that you're not afraid to lose. I think a risk asset means more concentration. So rather than being totally diversified, maybe you're making more concentrated bets. Maybe you're making bets in companies that have a higher risk reward profile. So, maybe when OpenAI gets on the stock market or Anthropic, will these be the next $20 trillion companies? Maybe, or will they go away? We don't really know. Right? And it might not make sense to invest from your normal portfolio into a company like that. But if you have a bucket of money that's designated to be higher risk, higher reward, then you're willing to take those bets. So concentration, using leverage, investing in, higher beta companies, meaning companies that fluctuate more, right? That have higher upside, but higher downside. Those would be risk assets. And you have to think about that money differently. Otherwise, you'll be afraid to invest. And when you do invest and things start to go wrong, you'll make bad decisions. You'll pull your money out of fear, which is always the wrong thing to do.
When is the last time you've been wrong?
I don't remember. Like I make bad trades here and there. Sometimes I decide to press an existing trade, and then the market comes out and does something or says something about the company I'm invested in, whether it was Bloom or Amazon, that temporarily loses me a lot of money. So there was a scary moment in the last year when my portfolio was down 70%, I think, close to 70% total portfolio, meaning like my total portfolio was down 70%, which was wild. And yet I disagreed with the reason it was down. I think it was shortly after one of our shows, when maybe during the tariff, right? Before the tariff stuff. And so I vehemently disagreed with other investors that were taking the market down. And it was really difficult for me when my portfolio was down that much to press yet again, which is what I did. Fortunately, as we know, it worked out, right? But from that moment, my account's 10x'd. So, when my account was down 70%, I don't want to give out exact numbers, but I know the number in my head. My account is 10x'd since that show of yours, which is pretty wild. That was a low moment. And now I'm at a high place and pressing again. So we'll see what happens. But again, the thing that gives me anxiety is missing out on this mega wave that I think is about to hit, because I don't know what comes after that, guys. Like, I don't know if I'm going to get another opportunity to press this hard into something that I have so much conviction in. Like, if Amazon triples or doubles from here as part of the AI efficiency wave, like, what's next? What's the next big driver for the market? I don't know. Maybe there will be something. But I'm telling you guys, these super cycles just don't hit that often. They don't happen every few years. They happen like every 10 to 15 years, maybe 20 years.
Now, really quick, every business is asking themselves the same question. How do we make AI work for us? The possibilities are limitless, but guessing is too risky, and sitting on the sidelines is not an option, because one thing is certain. If you're not doing it, your competitors are already making their move.
And that's where our sponsor NetSuite by Oracle comes in. It's the #1 AI cloud ERP, trusted by over 43,000 businesses to manage everything from financials and inventory to commerce, HR, and CRM, all in one unified system.
When all of your data is in one place, your AI becomes a lot smarter. It doesn't just guess. It knows. NetSuite intelligently automates routine tasks, delivers real-time insights, and helps you make fast, confident decisions that actually help drive growth.
And it's not just an add-on, it's AI that's literally built right into the system that runs your business, helping you cut costs, improve accuracy, and stay ahead of the competition.
Whether your company is making millions or even hundreds of millions, NetSuite gives you visibility and control to keep moving forward. Honestly, if I were building a business of this size, NetSuite's the only company that I have 100% confidence in.
So if your revenues are at least in the 7 figures, get our completely free business guide, Demystifying AI, at netsuite.com/clips.
Again, the guide is free for you at netsuite.com/clips, netsuite.com/clips, with the link down below in the description.